Have you ever looked at a market chart or, really any complex system with people involved and just felt overwhelmed? Like there's just so much noise.
Oh, definitely. Conflicting signals, data everywhere.
Exactly.
Yeah.
And you just wish you had a clear way, like a shortcut to understand what's really going on underneath. Well, if that sounds familiar, you are definitely in the right place today.
Mm-hmm.
Our mission here is to unpack really a really powerful structured way to look at price movements, sure, but also the human psychology driving them.
And we're using this fascinating source material. It's a structured trading script from a group called LlamaFX. Now, okay, it is framed for trading.
Right.
But the core ideas, they apply much more broadly. It's all about understanding market behavior and player psychology, really, in any system where people are making decisions.
So like a mental model.
Exactly. Think of it like a personal guide for your own analysis,
Yeah.
helping you connect, the charts and data to the actual people behind them, their feelings, their motives.
That's it. So we're going to walk through this script step by step. We'll cover the price condition, who the players are, their likely sentiment, and then how to think about actions.
Giving you that practical framework.
Yeah, that clear lens to make sense of this honestly really fascinating mix of finance and, well, human nature. Let's dive in.
Let's do it.
Okay, so we want to cut through that chaos. Where does this LlamaFX script say we should begin? Like step one.
It starts with the basics, the absolute foundation. Step one, identify the price condition.
Price condition, okay.
Yeah, the core question is simple. Is the price generally going up an uptrend? Is it heading down a downtrend? Or is it just moving sideways in a range?
Right, and it gives clear signals for those.
It does. Pretty standard stuff, but crucial. Uptrend, higher highs, higher lows. Buyers are clearly in charge.
Makes sense.
Downtrend, the opposite. Lower highs, lower lows. Sellers are calling the shots.
And the range.
That's just sideways chop, basically. It could be balance, could be indecision. The key thing is you're just mapping the landscape first, getting your bearings before you go deeper.
Okay, map the terrain. I like that.
And then almost immediately, the framework shifts. This is what I find so interesting. It goes from just looking at lines on a chart to asking who. Who is actually making this happen?
Ah, so moving from the what to the who.
Precisely. Which brings us straight to step two. Identify the players and their motives. The script prompts you to ask, who's in control here and why? And, maybe even more critically, what could possibly change that control?
Okay, so who are these players? Let's take an uptrend, for example.
Right, good example. In an uptrend, the script highlights a couple of key groups. First, you've got your early buyers.
The ones who got in, well, early.
Yeah, exactly. They're sitting on profits, maybe pretty decent ones, and their psychology, they might be feeling greedy, thinking this can go higher, or they might start feeling protective, nervous about losing those gains.
Okay, so they could sell.
That's the key insight. If they sense momentum is weakening, they may sell to secure profits. Boom. Instant sell pressure.
Gotcha. And who else is in an uptrend?
Then you have the late buyers. Often these are the FOMO buyers.
Fear of missing out, chasing the price.
Exactly. They jump in late because they hate seeing it go up without them, but their position is, well, precarious.
How so?
Because if that price pulls back even a bit, they're immediately hit with losses plus fear plus regret. That's a nasty combination.
Oh, yeah.
And that collective pain, that fear and regret, can easily snowball into panic selling. And that can actually accelerate a price reversal. It shows how individual emotions really add up.
Wow. Okay, so that's the uptrend. What about a downtrend? Similar idea.
Pretty much the mirror image. You have early sellers who got in near the top, feeling confident. Then you get late sellers.
Driven by fear again.
Often, yeah.
Ah.
Reacting to losses. Maybe they missed the chance to sell higher, so they sell now to cut their losses, or because they think it's going even lower. They tend to add momentum downwards.
Okay. And the range. That sideways movement.
That's often described as an indecision zone, or maybe accumulation distribution.
Meaning?
Well, the idea is that smart money, bigger players, might be quietly building up a large buy position, accumulation, or selling off a large distribution without causing big waves.
Doing it subtly.
Right. But what's also really common in ranges, the script points out, is trapped traders. People who bought near the top of the range thinking it would break higher, or sold near the bottom thinking it would break lower.
And now they're stuck.
Exactly.
Okay.
Stuck in limbo, waiting, hoping. That creates its own kind of psychological pressure cooker.
This is where it gets really powerful for me. Connecting those players, the who, to their likely emotional state. That feels like the next level.
It really is. And that brings us perfectly to step three. Analyze sentiment and expect reactions.
Okay.
The script pushes you to ask,
Good.
what are the dominant emotions likely running through the market right now? And based on that, how might these players actually act?
So questions like, are those early buyers getting nervous, starting to protect profit?
Exactly. Or are the late buyers feeling the heat? Bought high, now in pain.
And how do we spot this sentiment? Are there clues?
Yes, definitely. You look for signs of potential action or, just as importantly, exhaustion. The script asks, is the price hitting a key level, like support or resistance, where people are likely to make a move?
Makes sense. Supply and demand zones.
Right. And it also highlights specific visual clues for visible exhaustion. Things like smaller candle bodies,
Okay.
divergences between price and indicators, maybe volume drying up, or those rejection wicks on candles where price tried to go somewhere but got pushed back hard.
It's interesting, isn't it, that weakness or fatigue can actually be a clearer signal sometimes than strength.
It's often where the best clues lie, yeah,
Yeah.
because it signals a potential shift in control.
So if we weave all this together, the price action, the players, their probable emotions,
Yeah.
what does that lead to?
It helps you build a coherent story and narrative about what's most likely to happen next. That's step 4. Form a probability bias.
A bias. Okay, not a certainty.
No, never certainty. It's about probabilities. The script prompts you to think, are orders building up in one direction? It talks about stacked stops like fuel for a move if those stops get triggered.
No.
And also, is the dominant player, the buyers in an uptrend, say, still acting confident? Or are they starting to show fear?
And based on that bias.
You start anticipating. If you have a strong uptrend and confident buyers, you look for signs it will continue. If you see those topping signs we talked about, exhaustion, trapped late buyers.
Then you prepare for a possible reversal, or at least an exit.
Exactly. Or in a range, you're watching for that decisive breakout. Or maybe even signs of a fake out where it breaks one way then snaps back. It's about building an informed prediction, a story based on the evidence.
Right, okay. Building the story, forming the bias. But knowing what might happen isn't the same as knowing what you are going to do about it.
Absolutely crucial distinction. And that leads directly to step 5. Define your action plan.
The what you will do part.
Yes. And the script really emphasizes using if-then statements like, if price does X, confirming my bias, then I will do Y.
And crucially,
And if price does Z, contradicting my bias, then I will do this. It forces you to plan for being wrong, too.
which is essential. Discipline.
Total discipline. This step is about setting your entry points, your invalidation levels, basically your